Hey guys, AKIL'S here. Welcome back to another trading video. Just got off the road. I am properly caffeinated and want to share a quick video with you guys before I go pass out somewhere. The other day we had a nice lesson in our live trading room, and it made me want to present this topic to you guys. And it's one of the most important topics that we teach. It is one of the backbones of everything that I do with technical analysis, and that is the break above, close above, or break below, close below principle. If you ever been to one of our trading workshops, and I got some cool news about an upcoming one at the end of the video, you'll see that we use this from everything from identifying trend to identifying breaks or holds of structure to entries to, you name it. And in today's video, I'm going to share with you a lesson from our live trading room where we spoke about it in the sense of anticipating a breakout, but being kind of safe. And this goes hand in hand with something I always preach to you guys, where I say we want to be predictive in our analysis, but reactive in our execution, meaning that we want to make predictions in the market, but we want to make sure the market gives us a clue that what we predict is more likely to happen than not. And this break above, close above principle, well, it's one of the greatest clues that you can get. Let's hop in. Why the close of the candle has so much important in principle? Foundation Course 101, Alex, right? That whole process of IPDE, right? So the close has so much important because that's really going to tell us what happened and what didn't happen, right? So I'll give you an example and I'll give you an analogy, right? So let's say this yellow line is a level of structure, right? We've got two different candles here. So I'm going to draw a line in between. Example 1 and example 2. So if we're creating a story off of this candle, what type of story are you creating? What do you see with that candle on the left? So A. The bulls got rejected, right? So with the understanding that the bulls got rejected and did not break and close above that level, is that a positive sign or a negative sign for the bulls? If you're a buyer, would that be a positive sign or a negative sign? Negative sign, yep. Now, for example, B. How would you guys, what story do you create around this candle? Big bull candle, right? What type of candle will we call this? Was it strong, weak, neutral? How would you guys classify it? Strong, yeah. Yep. And it broke and closed above structure. Now, is that a positive or a negative sign for the bulls, for buyers? Positive, yep. So this is why the break and close is so important, because you think about it like sports, right? The close is the end of the game, right? We were watching Wolves versus Spurs the other day, or Wolves versus Man City the other day. And Wolves scored an early goal, went up 1-0. Man City tied it up, I think right before halftime. Then it stayed 1-1 for the entire game. And then in stoppage time, I think in like the 95th minute, something like that, Man City scored a goal and won. You'll hear this from coaches all across the world is you play till the final whistle. You play to the final whistle, right? Only when the game is completely over do we know the end result. Someone else had a late time goal yesterday as well. Or look at all these Hail Marys that Russell Wilson and Aaron Rodgers just throw in the NFL. Or the WNBA finals, which went to overtime. It was a crazy weekend of sports. But we wait until the whistle is over. For us in trading, the whistle is the session. And then we make only then do we know kind of the true story of the market. So going back to the original question, which talked about, why is the close so important? that close tells us the result. And after we have the final result, then we can make a decision on what the market is telling us. Let me know if that makes sense. Before the final result, we don't know. We don't know. We can guess and anticipate, but you never know, right? Because again, at some point, this candle, and this is the hard, and this is the part about if you're an aggressive breakout trader, this is the tough part. At some point, this candle was here. And at some point, Wolves was up 1-0 on Man City, and it was a strong bullish candle. But before the final whistle blew, nope, it got rejected. It got rejected. Yep. So it's very easy. I used to make this mistake a lot when I was I used to do this thing called one was FOMO, fear of missing out, so I would enter trades, but then a lot of revenge trading too, because I would fear of missing out on the move, I'd get in the move, and then the move would lose, and I want to get revenge and make it back. So all this revenge stuff, right? And I remember I would enter prematurely, right? I was supposed to be waiting for like a higher close, but then I would see something like that, and I'd be like, man, this candle's booming, right? I'm supposed to be in here, but if this thing keeps moving up, I'm not going to get involved till here, and then I'm watching like my projected P&L slow up, and I'm like, oh no, I'm gonna lose all my profit. So what do? I enter early, right? And the market's like doing this dance, and I walk around the house like, oh yeah, got involved, trader intuition. F those rules, man. I do what I feel, right? Got the magic touch, the Midas man. And then I come back and I'm like, oh. And then I end up exiting the trade or losing money. And I go back and do my review and I look at it and I'm like, all right, October 22nd, got long and lost. And I'm like, and this is like after I forgot about the trade. I didn't do reviews right away. I did them like at the end of the month. I'm like, why the hell did I get long there? Like it said, my notes say long on bullish breakout. I look at the screenshot. I would screenshot all my charts. I look at the screenshot, October 2nd, 22nd, bullish breakout. Like where's the bullish break? Like, all right, so 925, the 930 candle, like there's no bullish breakout there. It's a pin bar. Like then I'm like, oh yeah. Now I remember, I'm like, right. But I entered on the story completely changed from my over emotional state when I thought I was going to miss out on everything versus what actually happened. And instead of letting the story complete, I acted early. This was like, imagine leaving a movie early before the big twist, where it's like, oh, I knew that person was the murderer. Let me leave early and get out of here. And then like, as soon as you leave, right, 5 minutes later, the person you thought was a murderer is actually wearing a mask disguised as someone else. He takes the mask off and it's the mom. You missed the important part of the story because you didn't watch to the end or the closing credits of a Marvel show. So we always want to know the full story. Hope you enjoyed the video. Mark your calendars, November, I'm going to forget the week, Thanksgiving week, whatever that is, that Monday, Tuesday, Wednesday, and Thursday. We're hosting a 4-day trading workshop. It's a little bit different than what we've done in the past because we want a smaller, more intimate group this time. But head over to www.tier1trading.com, click the banner. It'll give you a link to the workshop where you can sign up, get put on the waiting list. And if there are spots available, boom, you can attend. All right, until next time, plan to trade your plan. Make sure you check out the Trading Coach podcast. Got some really cool episodes coming up. And I hope you guys have a great weekend. Go Everton, the undefeated streak continues.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.